Ladies and gentlemen, there are massive catalysts coming tomorrow morning for markets. Let me list them out for you. Jerome Powell gives a speech at 8:40 in the morning. Retail sales come out at 8:30 in the morning. PPI comes out, initial jobless claims, and Walmart earnings. It's going to be a data dump. By the time you wake up, markets are going to be probably 1% or more in either direction, up or down, based on how these catalysts go down. So here in this video, I will break down the expectations for those. What some of the good headlines are today on trade. China is actually relaxing some restrictions on U.S. companies. That's obviously a good thing. And Trump had some things to say as well. So I will give you a breakdown of everything that happened today and what to expect tomorrow, and really just my general view on this market throughout this video. Donald Trump says the Iran situation will work out. So, not going to war with Iran probably is a good thing. China pauses unreliable entity list measure on 17 U.S. entities, according to the Commerce Ministry. China also pauses export control measures against 28 U.S. entities for 90 days, starting May 14th, which is today. And a trade tariff deal with Japan and South Korea is said to be close, according to sources. Trump said, "I'm a big crypto fan and we're leading China in crypto." Now, on the Japan and South Korea deal being close, this is according to Wall Street sources close to the White House, the timing is unclear. India deal as well, though it has been throttled by the tensions with Pakistan. And U.S. House Majority Leader Scalise says we will get the tax bill to Trump's desk before July 4th, which is something that not a lot of people are talking about right now. Go back to January and February. The stock market was doing well, although it would have done a lot better if it wasn't for the threat of tariffs looming over. But we were all focused on deregulation and lower taxes and some of the positive Trump policies, especially like financials, were really doing well on some of that deregulation and lower taxes. We've long forgotten about that, but I do think that is something that will come back around when that bill gets close to being passed, and Wall Street will start to kind of price that in and what that could look like for the economy. BMW CEO has predicted that Trump's 25% tariffs on foreign cars will be lowered by July. Speaker Mike Johnson declares support for a congressional stock trading ban. And Donald Trump secures an historic $1.2 trillion economic commitment in Qatar. And the White House says that Qatar plans to invest in the U.S. over the next 5 years. Now, we did not have really anything for economic data this morning, some oil numbers, but that doesn't really move markets. We did get a speech from Fed Jefferson. Here's one of the first comments. Fed Jefferson says the first quarter GDP data overstated the deceleration in activity. And Jefferson says whether tariffs create persistent inflation depends on implementation and the response of supply chains, among other factors. Fed Jefferson says the labor market is still solid. Jefferson says, I expect lower growth due to trade policy, but I expect the economy to still expand over the year. He says that recent inflation data consistent with further progress towards the 2% goal, but future path uncertain due to tariffs. Jefferson says that he is watching closely for signs in the hard data of weaker activity. And he says, last but not least, the moderately restrictive policy rate is in a good place to respond to economic developments. The percent of stocks trading above their 50-day moving average is currently sitting at about 65%. That is on the high side of, bull markets, historical rallies. But I do just want to say that it's not that the markets are too extended. There's a lot of correlation. We've talked about this before here on the channel. Stock price breadth is in extreme greed. This is the best breadth you've seen since October of 2024, when basically everything went straight up for about 2 months, okay? And even then, you've had choppy moments of breadth. Not this time. Ever since those lows in markets, these green days have been green for a lot of different stocks and sectors. It's virtually everything is going up at once. Okay, so keep that in mind. It's not super shocking. that we have a lot of stocks above their 50-day moving average. Now, the headline Fear and Greed index is coming in at 71, which is on the high side of greed. Again, kind of being thrown off by certain indicators that are super strong, like stock price breadth. Stock price strength is in greed. Put and call options in greed. Market volatility is neutral. Safe haven demand in extreme greed, and junk bond demand also in extreme greed. And market momentum is still in extreme fear, right? So I still think there's more of a rally that could come in this market. And I actually think the positive correlation is really just a good sign. I mean, stocks are moving up together. It's not just the Mag 7 that is doing all of the heavy lifting. It's everything. It will also be very interesting to see what happens with investor sentiment, because there's still a lot of bears out there. And I think a lot of it is big money that is super just still bearish, because one, we don't have trade deals finalized. Yeah, there's uncertainty if anything could change or get worse. But the whole slowdown, recession thing has scared a lot of Wall Street. And I do believe if we continue to go higher, you're going to see a chase. And to even a certain extent, like a broader market short squeeze could ensue if the economy continues to stay strong, which is why I think Walmart earnings tomorrow morning and retail sales are going to be so important. Because if it does show the economy is still doing okay, then there's really not a reason to be out of this market. Like, you would want to be in this market, right? Doesn't that make a lot of sense? It should. Now, again, as we talked about at the start of this video, there's not a lot in terms of economic data today, but tomorrow is going to be the big event, okay? You're going to get a lot. Jerome Powell, retail sales, PPI, initial jobless claims, Walmart earnings. And right now, we will go over the expectations that Wall Street has for all of this data. Now, PPI month over month tomorrow, I think, is the lesser of the catalyst. Okay, this data is all for April, by the way, besides initial jobless claims for last week. PPI month over month is expected at 0.2%. Don't really think that matters as long as it doesn't come in really high. It's really going to be about retail sales, okay? Because retail sales, personal spending, that is like 70+% of the economy. People spending money. So if people slow down or stop spending money, that's bad, okay? Now, the good news is the expectation is really low tomorrow. So last month in April, you were positive 1.5%. So when you're comparing month over month, that would be like no growth over 2 months, okay? Basically flat if it comes in at 0. So you're not expecting any change on a month over month basis. Well, if it comes in negative, that would be, worse, okay? 0%, not a terrible number because last month was so strong, okay? If it comes in positive, then that's really good. Let's say positive 0.3, 0.4, 0.5, something like that. And I think Wall Street would really like that because that shows the consumer is continuing to spend and the odds of a recession likely, come down at that point. Now, core PPI month over month is expected at 0.3%. Again, as long as that's not really high, I don't think that is too big of a, hiccup that markets couldn't get over. Initial jobless claims are expected at 229,000. They've been in this range most weeks. As long as you don't get some kind of blowout number to the upside, I don't think we're going to care about that. If the number comes in low, that's going to be good. You do have New York Empire State Manufacturing that's expected to come in worse than last month. Come in at -10 is the expectation. The Philadelphia Fed Manufacturing Index is expected at -11. Last month was -26.4, so that's expected to get better but still be negative. You get retail sales control group month over month, expecting that to be positive 0.3%, and retail sales excluding autos month over month, which is something Wall Street actually, does pay attention to as a subcomponent of retail sales, is expected at positive 0.3%, down about 50% from last month's positive 0.6%. So expecting a slowdown across the board. If we don't get that slowdown, or it's not as bad as expected, that is it's going to be a really positive catalyst for markets. Now, we also have a speech at 8:40 in the morning tomorrow from Jerome Powell. Okay, so you're going to wake up with quotes coming out from this Powell speech. What we really want to know is, does a China deal change anything for Powell? Powell's not going to get too far ahead of that. He's not going to draw conclusions that the deal's done or anything like that. But if he says anything along the lines of, if the current trade environment holds with certain proposals that we've heard, maybe that could allow the Fed to cut rates sooner. Maybe there wouldn't be as much inflation associated with that. Okay? Or associated with that. That would be one headline that I think would be very positive. Overall, we've seen positive developments with trade, and we are expecting more trade deals to be announced and signed soon. Japan, South Korea, and India are the countries that are speculated to sign trade deals. And that's going to give the Fed, a little bit more certainty. Whether Powell acknowledges that or not, in how that changes the path for the Fed, that is what is going to move markets with that speech from Powell tomorrow morning. Okay, so that's going to be huge. And it's kind of a sleeper catalyst here, because not a lot of people know Jerome Powell is going to be speaking tomorrow. So might catch Wall Street a little off guards, if you will. It's kind of at a weird time, 8:40 in the morning. Normally Powell doesn't speak that early. You will get industrial production month over month, manufacturing production month over month, year over year numbers for both of those as well. You will get the NAHB housing market index that is expected to be unchanged from last month. And then Fed Bar speaks at 2 p.m., but really after your data and after the speech from Powell, that's going to determine what happens with the trading day tomorrow. Also, big catalyst, Walmart earnings. Now, again, as I've said before, in 07, 08, Walmart was one of the first companies to warn about the consumer and trouble ahead. And, stocks sold off like 3%. I think this was September 2007. Maybe March. It was at some point. Doesn't really matter. It was before everything went south. Okay, like a good year before everything went south. Walmart started to warn about the consumer, and it was something you probably should have paid more attention to back then. Now, Walmart has had good earnings. They've benefited from a weaker consumer shopping at Walmart instead of Target and other more expensive retailers. So you really want to see what Walmart executives have to say about the consumer and about shifting activity. Is discretionary picking up a little bit? Is it still weak? Doesn't matter as much. Is staples and food, how are those sales doing? Are people just cutting back in general? Walmart's going to tell us in real time what the consumer is doing. And I think that could actually be a big catalyst for tomorrow. For that reason, we're all trying to figure out, is the economy going to slow down? Is the consumer slowing down? Are we going into a recession? And Walmart, I think, gives us a little bit more real-time guidance to go off of. And I believe Walmart's always macro catalyst for markets when they report. But I think even more so this time around, when there is so much uncertainty and so much of Wall Street is really on the sidelines of this market. Like, retail investors have been the ones to really profit from this recovery so far. It hasn't been big money, and big money could start to pile in and honestly start covering on a lot of their short positions. They're still heavily short this market and still very much fearful. And Walmart earnings, a speech from Powell, retail sales, if those things come in good and there's not anything bad to say, I don't know how you could have a bear case on this market for at least the foreseeable future until something changes or gets worse. It would be really hard to be bearish on this market. Now, that's from I'm a bull right now, so that's from my perspective. I think you want to be long this market. Now, if things are bad, if they're not as good as expected, I would think the markets would trade down to that 100-day moving average over the next couple of days. That is about 576 on the SPY. That would be a move lower of a 2.2%. Not a big deal in my opinion. I don't see a full breakdown coming. And, I still think we're in for a 20-ish% rally over the next 6 months. And I think the sooner most people come to the conclusion that there's probably more upside versus downside, the better off people are going to be. But again, I'm not a financial advisor. I'm not a financial planner. That could be wrong. That is just my opinion. And that is how I am positioned in my portfolio. Like by year end, if the S&P's at 700 and a lot of stocks are up 20, 30, 40, 50% from current levels, I can't say I would be surprised. That's just how I'll put it. So let me know your thoughts on all of this down below in the comment section. Have a great rest of your day, and I will see you in the next one.